Everyone's screaming market crash. Shiller PE at 39, yield curve inverted, Buffett sitting on cash. But here's what they're not telling you. The yield curve inverted in 2022. We were promised a recession. Instead, the US economy grew 2.9% in 2023, 3% in 2024, and is tracking 4% growth in Q3 of 2025. There's the crash. These experts have been screaming overvaluation since 2013. The S&P 500 has tripled since then. If you listened to them, you would have missed a 200% gain. The market is more resilient than they want you to believe. But what about Buffett's 30% cash position? He must be predicting a crash, right? Wrong. Buffett himself said, and I quote, "Despite what some commentators currently view as extraordinary cash position at Berkshire, the great majority of our money remains in equities." He's earning $12 billion a year on treasury bills while waiting for elephant-sized deals. That's not market timing, that's portfolio management. Big difference. Buffett has famously said that forecasts tell you everything about the forecaster and nothing about the future. Here's what really grinds my gears about the crash videos. Long-term wealth creators, the smart money, they don't panic. They don't sell. They might even buy more, in fact. But retail investors, they watch these videos, they panic sell at the bottom, and then they buy back in after the recovery. They crystallize losses and miss the bounce back. Look, I'm not saying markets can't correct. They will. They always do. But timing crashes, that's a fool's game. The real wealth creators stay invested, stay diversified, and ignore the noise. Warren Buffett said it best: be fearful when others are greedy, and greedy when others are fearful. Right now, everyone's fearful. What are you going to do? Not a financial advice, just food for thought.